Hello, everybody. Andrew, Philip. We are talking today about portfolios, buying a portfolio of houses or maybe small multifamilies, duplexes, fourplexes, whatever. This can be anything from 2 units to or 2 houses to several hundred or several, like 87,000. I believe that's how many houses Invitation Homes owns, who's the all-time
I don't think
record
they
holder.
bought it all at once, though.
Yeah, but they could conceivably sell it all at once.
Fair enough.
Anyways, buying portfolios, especially if you're looking to grow rapidly or trying to kind of grow exponentially if you've already have a foothold, is definitely a good approach to getting into real estate more so. It is more like buying an apartment in a lot of ways than buying a single house. Now, there's two basic ways to value these. The first would be sort of, I'll call it the corporate way, which is you have a buy box. You're looking to buy in a certain area, certain cap rate, or they like to say gross yield, which is basically rent to cost, which rent to cost is just the monthly rent divided by the total price of the property, which is like, so 1% would be like $1,000 a month, $100,000 property. This is not, so they're going out for basically a return every month for their investors. That's not generally what you want to look for as a real estate investor or as an individual, more entrepreneurial real estate investor. Yes, you do want to look at what the return is. You do want to run put together a cash flow pro forma, look at the operating history, make sure the properties have been performing well, and figure out what the cap rate is. But these properties, houses don't sell on cap rates.
No, you need to do this for yourself, in my opinion. But if you're ever going to bring on partners as well, which is very common with portfolio deals, that's going to be almost 100% necessary in those kind of situations.
Yeah, you want to show your investors what kind of return they're going to get on a monthly basis, because that's what they're going to be looking for first and foremost. But as investors, particularly as buy and hold BRRRR investors, or people who have experience in flipping, first and foremost, we're always interested in the how much equity, the built-in equity side of it. So generally, when I'm looking at a portfolio, yes, I want to see its operating history, how it's done the previous year, put together a pro forma, and see how well I think we can do if we raise the rents and all the rest of that. But the main thing I'm looking for is what are the properties worth individually, and when you combine that all together. And usually with a portfolio, you can get a bit of a discount. And so this is, now maybe you're only able to get a 10% discount and you're looking for something like what we normally do, a 25% discount. Okay, well, so you're going to have to look through a lot of portfolios. If you're going to, where are the portfolios? Well, they're all over the place. I mean, sometimes they'll be on the MLS, sometimes they'll have real estate agents. You'll find ones on Craigslist.
There's
or
no
Facebook
systematic way to
Marketplace.
find people who own many
wholesalers
properties
will bring them to you. You could specifically market, like go to ListSource and look for people who own multiple properties and see if you can buy one that way, or get in touch with real estate investors, particularly older real estate investors, and be like, hey, by the way, when you're looking to retire or whatnot, think about selling to us. But there's no one place to go for portfolios.
I mean, it's the same for single houses too. I mean, there's 100 places.
I mean, there are some places for institutional investors to go for those types of deals. But again, you're looking in higher end markets. Like we are generally in sort of working class to middle class, and they're going to be in middle to upper class. These corporate ones looking at their buy box with their gross yields. No, I doubt there are any of those. I mean, watch the video, give us some clicks, share, whatnot. But generally, what we're looking at is so you want to see what is the price that these people are looking to sell this portfolio at, and then just really kind of get your. I like to just quickly go through and put the Zestimate for each one from Zillow, just to get a feel. Like the Zestimate is not a great way to look at it, but just to get a feel for approximately how much is this portfolio worth, and then I can just judge it based if I know the areas. Just go through. Okay, that's approximately this much. That's approximately this much. If you have a virtual assistant, I like sending the portfolio to them, and they can fill in the Zestimate or the number of bedrooms and bathrooms and square footage and the age of the property if you haven't been given a data tape from the seller with that information. But that can give you a decent idea of approximately what the value is, and that's kind of your starting point. The next part is figuring out basically how much rehab you're going to need to put into it.
Well, almost without fail,
yes,
these portfolios are going to come with the rents can be raised. That's going to almost always be something people are going to say.
Yeah, they're generally not in great condition from our perspective. I mean, we've seen portfolios that are just full of complete junk, which aren't even worth looking at. But even the good ones usually
part
are.
of the reason is because if it's a portfolio deal of even 20 houses or 30 houses or 100 houses, whatever it is, some of those houses were leased 6 months ago, some of them were leased 5 years ago, most likely, and those leases that were 5 years ago are rarely going to be at market rent, and they're going to have some, what a lot of people would call deferred maintenance. We call it FAIR, which is future anticipated rehab expense, and that's money we're going to have to put into the project once the resident moves out to kind of bring it up to a new standard, and then get higher rents and kind of put it to our standard of property at that point. And that's normally going to be, at least for us, how we do things, significantly more than just a regular turnover where, your resident moved out after a year or two and then you have to turn it back over to the next resident. There's going to be significantly more money you have to put into that. So we put that into our numbers in terms of what we purchase it for, and then we have our fair number for the whole portfolio that we come up with, which is over time, we're going to have to put this much money into these units to turn them over and to get higher rents on everything.
So, now this is hard to figure out exactly what you're looking at. It's the same with the apartment. You can't figure out exactly what all 100 units or 25 units or whatever is before you've walked, before you've done your due diligence. And it's not worth, even if you could, going through 100 units or even 10 units before you
make an offer.
Before you make an offer. You just want to get a vibe for it. First thing is look at the rent roll. If they're very low rents, you probably got a lot of deferred maintenance. That's the first thing to know. If you don't, I would highly recommend, in the same way, like, unless you are planning a massive reposition, you are a seasoned investor, buying a 50-unit apartment that's vacant is not a good idea. Same with portfolio. Now, I prefer, actually, to buy a house that's vacant, a single house, just because I know we're going to need rehab, but the rent's probably low. I don't want to kick the person out or anything like that.
We have our standard of house once it's finished.
With portfolios, I want them to be at least relatively performing, because it's
a lot of work to do when you close all of a sudden.
I mean, maybe if it's 2 or 3, that's technically a portfolio. Yeah, okay. So, and then you want to see as many pictures as you can, get a feel for the properties, view a couple, particularly if you can kind of get a feel for what kind of amount of work to do is. And then, I mean, the first thing is just when making an offer, I state our assumptions for this portfolio. I said this amount occupancy, the properties need approximately this much work, they're in this kind of condition. And so if I have, there are 3 down units, so 3 properties that need complete rehabs, and the rest of them are all in decent shape and just need either a turnover or maybe a heavy turnover, and then I go through it and there's 5 down properties and 20 that are rented but are just complete slums, I can go back and say, we need to retrade this price. And again, as you can probably intuit from that, you should walk every single unit in the same way. Yes, it's brutal. We bought a portfolio of 5 once, and that wasn't that big of a deal. Bought a portfolio of 97 once. That would have been extremely challenging. That one in particular, and this is just a side note, it was a big thing for the owner not to do that. So insofar as we were not able to walk every unit, we needed an additional discount because we've got to assume they're not in the kind of condition that we'd hope they'd be in.
But we walked, dozens of properties day after day before these portfolio purchases.
If you've noticed, this is similar to an apartment. You want a certain level of occupancy. You're not looking for an individual house. It needs to be performing. You want 85 to 90% at least occupancy, unless you're buying it to reposition. That's obviously the thing. You're looking at vacancy rates. You're creating pro forma. You're looking at. You're approximating what the condition is of these units based on the ones you've seen and the pictures you've looked at, and then you're making these assumptions. I recommend the same thing for apartments. List your assumptions, and if your assumptions are off, retrade. Request the price to be lowered while you're doing your due diligence, or if it's really, really bad, just back out. But the big advantage with portfolios, of course, is that you can. You're getting that you're buying on 2 levels. You're buying based on how much they're worth, and usually you can get a discount.
There's one big unique factor with the portfolio is that there's multiple parcels, and that seems kind of not doesn't mean anything, but it's actually super critical because you're buying in bulk, and when you buy bulk from anybody, you get a discount. And I've heard a general discount on
and you're not
real
getting
estate.
you're not getting a discount buying an apartment.
No, you're not.
It's not buying bulk.
I mean, you can. If
yeah,
you
you
find a
can,
great deal.
but with portfolios, you are buying bulk. It's more annoying, but it's
Yeah.
kind of like buying an apartment, but you should get a discount.
You're basically buying in bulk, getting a discount because you're buying in bulk all at once. And I've heard a general average discount is like 8% just right away.
Yeah.
You're basically buying at 92% appraised value at market value.
And
when
then
you're
if
buying
you can
enough houses.
find a motivated seller
You
or
can get
value
even
add,
better. Yep.
yeah, you can give.
So, but the reason why it being on separate parcels is so important is because each parcel can appraise on its own.
Yes.
So you can then go to try to finance them on the back end and burr out of these by each parcel is going to have a higher appraisal than the bulk price you end up purchasing it for. Also, because there's so many parcels, you have a lot more options when it comes to financing, and we've done all sorts of things when financing these portfolios. We've financed each property individually with private lenders. We've done one big bulk purchase with a partner who came in.
Yeah.
We've done a mix of bank financing with
private lenders.
with private lenders at the same time because we split up the parcels into ways. You can get really creative to try to make a deal work where there isn't one otherwise if it's all stuck in one financial
And we'll make some
parcel.
future videos going through the financing
Yeah.
aspects of individual deals, particularly probably at least two of these, because maybe three of them, because we have several
We've had
different
some
styles.
interesting
And
ones,
I
yeah.
think going through an individual deal would be helpful. But with regards to like the partnership, it would be similar to buying apartments. As you can see from, you can see like bigger pockets like people like Ben Leibovich or Matt and Liz Faircloth. You know, getting a partner to bring in the down payment and you get a piece of it, 25%, 20% or thereabout, even without putting much or any money into it, and creating a security. Or with these, like, you know, we split one package into 4 groups. It was 41 houses. We split it into 4 groups. We had 4 different closings. We had just done a major refinance on 25 different houses. We had a lot of private lenders. We had some other ones. And it was just too much to do it all at once. So we had 4 closings over the period of 2 months, 15 days, every 2 weeks. And we take some of those private lenders from that major refinance that we had, and we put them on some of these properties. We'd close that group, we'd close the next group, we'd close the next group. Remember, one of the best parts about this, there aren't a lot of buyers for portfolios. You've got those institutional buyers you mentioned at the beginning, but they're looking for really, you know, middle to upper middle class houses. They're looking in higher end areas.
And they're usually not looking for 15 houses.
Yeah, they're looking
for 200.
50 is the minimum. Yeah. And there are also less of them. Invitation Homes is really big, but like B2R was like the first one in this market, and they're gone. They left. So there are less of those players. Most investors are looking for 1 house, maybe 2 at the most at a time. If you can be in that, or once they get bigger, they start looking for apartments. And I'm not saying don't look for apartments. We buy apartments, but if you can get in that 5 to 50 range, or even thereabout, in sort of the working class, the middle class area, the solid places, the solid markets that aren't that are the best for cash flow investors, particularly entrepreneurial investors, and not institutional ones. There aren't that many. You have a lot more leverage. That's why you get that discount, and if you get a bigger discount if there's some sort of if they're motivated, and you can also you can often get financing or deal structures that are very favorable. Seller financing, we've done that. Splitting the loan up, private lenders on individual properties within the portfolio, or getting financing on the whole thing with a partner.
Now, there's one little caveat I want to kind of say, because a lot of the work that goes into buying a portfolio actually happens before you even know it exists. Mm-hmm. Because you have to be able to take on the workload. If you're one guy who's just getting into real estate and finds an amazing deal on 40 houses, maybe you can find a way. Yeah, that's a good idea. But like, if you want to buy that and hold it, or maybe buy so many of them and sell a couple to finance a lot of it, you got to have the infrastructure on some level. You have to have the ability to do it, because the management piece is big, and you're usually increasing your overall size of what you're doing by a significant amount. You need to be able to handle that.
I mean, unless it's like 2. We're not talking about a newbie strategy.
Well, okay. I mean, but even 2 for someone who's never bought anything, that's a lot to take on.
Yeah, this is not a newbie strategy. This is an intermediate strategy. Yeah. Intermediate to advanced. And I think that's probably where we should wrap it up. I think we will return to the subject and go over some of our individual deals, because we've kind of become a bit specialists in this area and really, really like portfolios.
You forgot our legal disclosure.
Oh yeah, we're not lawyers.
Well, not that. Legally, this is a YouTube video. So we legally have to tell you to like the video, subscribe to our channel, share it with everybody.
Instagram.
This is legally has to be said on every
Yeah.
YouTube video. So
I
we
think
are
so.
completing our legal requirement for YouTube to say that. So anyway.
I almost forgot.
Yes.
Anyways, thank you very much for joining us, and we'll be back soon.
All right. Thanks, guys.